IMO 2020 is probably a term you've heard about for a while, but as January 1st inches closer and closer, what does this fuel change mean for both shippers and carriers? Joining me now is our FreightWaves oil expert, John Kingston, FreightWaves CEO Craig Fuller. And John, just real quickly, we're talking about reducing sulfur emissions. You said you've been talking about this in your industry for more than a decade.
Long time.
Yeah, so it's nothing new. Overview, what is IMO 2020?
Well, the rule now is that bunker fuel, which is the fuel that goes into ships, can have 3.5% sulfur in it. IMO 2020 will cut that down to 0.5% sulfur. You mentioned January 1st, but ship owners are going to start cleaning out their ships like in September. So if there's going to be a market impact, it's going to be felt long before January.
What is this impact we're going to feel?
Well, here's the issue here, and without getting too deep in the weeds. Unlike other environmental regulations that have cleaned up fuels, taking sort of nasty stuff out, this is going to be different in that the market that's now being supplied to ships that uses fuel oil, like the bottom of the barrel, is going to be supplied to a certain degree, which we still don't know yet, by some diesel molecules. And so it's very different in that sense. So here we've got diesel molecules now. They're going to have to go flow for various reasons into part of the shipping market. This is why this makes it kind of so scary, in which a lot of people say this is the biggest change that we've ever had in fuel specifications. And we've been changing fuel specifications for, you go back to the removal of lead back in the 70s from gasoline. So this is a long-standing process. But in all of those, you kind of took out nasty stuff from the existing fuels. This you're going to be diverting. So the diesel molecules that now can end up in a truck are now, some of them are going to be diverted into the marine market. That's the big change.
So two industries are potentially going to be sharing now the same fuel. Does that change how these small carriers, how they afford their fuel and pay? Because it looks like two guys are going to need it.
Yeah, so it's interesting because, like you mentioned when you opened the segment, that this is a topic that gets talked about a lot. In trucking, almost no one is talking about it. And in fact, talking to executives of some of the largest trucking companies in the U.S., asking about IMO 2020, they sort of look at you like, what is that? And so it's an underreported and underappreciated story for the domestic diesel market versus what, if you look at any of the international conversation or international publication, it gets written about quite often. We report it in our maritime coverage. It gets reported by other news outlets, and in the oil markets a lot. It gets almost no coverage in the trucking market.
I'm assuming a lot of people in the trucking industry just figures it'll go into the fuel surcharge, it'll get passed on to the shippers. But if you're an independent owner-operator, I don't think it moves quite that smoothly.
I think that's exactly right. So the large carriers are able to pass those costs off. So we're, your estimates, John, 20 to 25 cents a gallon impact in diesel. The large guys will pass that off through fuel surcharges because it will show up in their fuel cost. They'll be able to pass those costs, those increases in cost off to their shipper customers. The small guys, the small independent guys, won't be able to recover that cost. They will be subject to dealing with it.
Why are they not talking about it? Why are people?
I don't know. I mean, I think the media, us included, have not done enough to talk about this IMO 2020 impact, because you read about it, you hear about it, it feels or looks like an international story for international maritime. It doesn't appear on the surface to be a story about domestic oil and domestic fuel and domestic diesel prices.
I mean, most of the coverage, the only agency I've found out there that has kind of tried to drive it down to an over-the-road diesel price is the U.S. Energy Information Administration. They've put out a model that they see, if you assume the price of crude oil to be static, which is a big if, that they would assume about 25 cents increase in the gallon price of diesel. I mean, that's a significant amount. But the focus on most of the coverage has been on, well, what's it going to affect on, what's going to be the impact on shipping, and how it gets down to the over-the-road truck market. It's a little more tough to make that direct link.
Yeah, so if it increases the price of fuel by 25 cents a gallon, that's about a 4 cent per mile increase cost to small operators because you think about 6.5 miles per gallon, 25 cents a gallon, it's going to be the 4 to 4.5 cent cost increase. And if they can't pass it off to their shippers, they're going to have to eat that. And so you look on a margin basis, it's about a 2.5 to 3% increase in cost. And that, for many operators that operate they operate within a 2 to 3% margin. So it could have a pretty tremendous impact.
The biggest fear too, and a lot of times when you've gotten these environmental changes in various fuel rules, you get chaos. Not chaos that lasts forever, but you get chaos during the transition. And I think that's the big concern here, that you could have, a month, 3 months, 5 months of wild swings in the market. Nobody knows what's going on, and eventually markets do adapt. But as I said earlier, I think this one's a little tougher to adapt because of the diversion of diesel molecules into the shipping market. That makes it different.
So John, you having the benefit of having you here as a full-time resource, I've learned a lot about why this IMO 2020 regulation will impact domestic trucking, but I don't know that we've done enough justice to it. Can you explain a little bit more on why you think that IMO 2020 bunker rule will impact the retail diesel market, or just ultra-low diesel market
really,
in the U.S.?
Through two ways, really. First of all, what they burn now is called high sulfur fuel oil. So the shipping market burns high sulfur fuel oil. So what the oil companies are developing are new compliant fuels that they're kind of calling VLSFO, very low sulfur fuel oil. And they're basically a fuel oil product. I mean, if you think of the barrel, you put it through a refinery, the light ends come off, they go to make gasoline and naphtha, the middle stuff comes off, they're used to make diesel and jet, the bottom stuff comes off, it's used to make bunker fuel and some other stuff. I mean, that's grossly oversimplified, but that's basically it. So what they're going to do now is they're going to make this product called VLSFO, very low sulfur fuel oil. But to get there, they need to take some of the distillate product, something called vacuum gas oil, and blend that in to make VLSFO. So that's number one.
So there's a finite amount of capacity for this vacuum?
Vacuum gas oil.
Gas oil that's currently being used predominantly in the ULSD market.
Exactly.
Ultra-low sulfur diesel market.
And now some of it's going to be
so they're going to have to share ultimately.
Right, exactly. Yeah. Now there have been capacity increases, okay? The question is, we just don't know if there's enough. The second thing that the impact on the diesel market is this: there is an existing product out there called marine gas oil. There's also a product called marine diesel. There's a few slight differences between the two, but it is essentially a diesel product. If you had to diagram the molecules like you did in high school chemistry class, it would be a distillate product. Marine gas oil is a known product. Very low sulfur fuel oil is not. Now they're going through testing, but you keep hearing from a lot of ship owners. I'm going to a conference later this week. I'm expecting I'll hear the same thing, is that a lot of ship owners do not want to run this stuff through their ships until they're sure it's okay. So what are they going to do? They're going to turn to marine gas oil in the interim. So that is a distillate fuel that they'll put right into their ships. Now, of course, if they do that, they won't be putting in VLSFO, which means that the VGO that was going to go in that won't need to go in that. So it's all very complicated. But all of this is going to mean more distillate molecules going into the marine market where they were not there before.
So there's a finite amount of that capacity in the market that gets taken out of the trucking ULSD, the ultra low sulfur diesel market, and therefore we're stuck with just a larger market fighting for the same amount of supply.
That's the fear here. Now there are a couple of things that people are not sure of. What is the rate of non-compliance, where ship owners just say, I'm not going to deal with this. The higher rate of non-compliance is actually good for trucking, because it means your high sulfur fuel oil, you'll still get used. If the price of high sulfur fuel oil collapses really low, then what happens is that the scrubbers that you can put on the ship, where you can still burn the high sulfur fuel oil, it scrubs out the sulfur, so now you're in compliance. That may rise, and therefore that's less demand for very low sulfur fuel oil, which means less demand for diesel. See, this is where, there's been a lot of analogies to IMO 2022, Y2K.
Oh wow.
Yeah. Well, but Y2K was not a big deal. Everything worked out okay. And my view on that is that Y2K was a finite list of things that you had to fix, and if you didn't fix them, you were in trouble. But basically, everybody fixed everything, so we didn't have an issue. When you're talking about IMO 2020, you're talking about the complexities of these markets, all interrelated to each other. What's the price of high sulfur fuel oil? Maybe incentivize scrubbers. Well, I'm not going to comply. I'm going to use marine gas oil instead of VGO. You get all these things here.
It reminds me a lot of the ELD mandate that everybody knew was coming and happened, but no one knew what the impact would be. And we saw a lot of short-term chaos as it sort of implemented, as people figured out how to use these things. It reminds me a lot of that, actually, more recently for the trucking market.
I think you're right, and of course, the ELD didn't even really get fully hit because all the AOBRDs are going at the end of the year, so you'll have that too. But this is going to be starting around September. Now, the futures markets are not yet revealing much of anything, which is actually kind of good news. If you look at, let's say, the January ULSD contract on the CME, it doesn't show any particular spike. So far the market is calm. But these kind of things, it's people just realize all of a sudden, well, maybe I ought to start buying this, So right now everything's calm. Let me just show another factor. We're sitting here on Monday, and all weekend long and all this morning, you just hear a lot of stories, a lot of talk on social media about oil having hit an inflection point of now going down. That maybe oil is like trucking rates, that they're really a real indicator of a softening market. I mean, if you had oil drop down to 40, then the impact coming from ULSD in the diesel market because of IMO 2020 is going to be muted, just because the market's so much lower. And the one other point I want to make is when we went to take out sulfur from diesel back in 2006, 2007, the price of diesel spiked. And by May, June, July of 2008, it was insane. The price of crude was insane. The price of diesel was even more insane. Well, then you had Lehman Brothers, and you had the collapse, and everything fell apart. And so oil plunged, and diesel plunged, and everything plunged. I always wondered how long diesel would have stayed up had we not had that. Maybe we'll see.
You talked a little bit about compliance, and it's something I want to talk about, because some of the, people talk about these scrubbers, which are, to me, I'm using an analogy of a catalytic converter. It's just basically scrubbing the.
It's a good analogy. Yeah.
The particulates that are coming off the ships. Only like 5% of the global shipping volume are going to have scrubbers by the time this is implemented, right?
Yeah, that's something like that.
Yeah, and so we have 95% of the world's ships, and it's 100,000 ships, I think. So only about 5,000 of them are going to have scrubbers. 95% are not, and assuming they're going to want to be in compliance, which most of them do, because ports will start finding them or refusing access if they don't. I think Singapore actually talked about putting them in jail.
Well, that's if they have what they call an open loop scrubber, and they dump the sulfur in the Singapore port.
Got it.
But what you're talking about, the compliance, I think the insurers are very important here, because they might say, we're going to enforce this basically in the sense that if you're not in compliance with your fuel, your insurance lapses.
Got it.
So they're kind of
similar to what they did in the ELD mandate.
Right. They're kind of, so the insurers here are kind of this undeputized enforcement mechanism. They didn't mean to take that on, but they will.
My question is, in terms of if you're a small carrier and you're not caring about IMO 2020, why should you care now? You're talking about this 4 cents that you're going to have to eat that cost. Kind of talk to the small carriers out there.
Well, I mean, ultimately it's a tax on your business. So whether it's a tax by the market or a tax because of this tightness in supply, ultimately it's a tax on your business. And we've talked a lot about the shape of the market, the tough environment that we subscribe that's going on in the market right now. This is just one more thing that's going to impact you. It's important to plan appropriately, realize that IMO 2020 is coming down, that it is going to have an impact on diesel prices, and that's a cost that you're not recovering. So again, it's important in this market to pay attention to cash flows, pay attention to, because the thing about fuel is that every time you fuel up, you're paying. That's a cash negative item, and if you're waiting for cash to be collected from your shipper or brokerage customers, there's a time delay. And so even if you are getting fuel surcharge, you have to wait for that cash to come in. And so,
one thing that as far as the supply chain, which you can never really figure out what it's going to be. So if an independent owner operator or a big fleet, let's say they get hit with a big price spike, what do? Okay, everybody dial down a few miles per hour. There's a lot of talk about ships crossing the ocean. They'll slow steam. So these are all kind of market reactions, and
they're not.
We just don't know what that is.
We've seen since the ELD mandate that they actually are increasing speed, and they're actually burning more fuel miles per gallon. dude, in fact, when we had that MPG data that we had from Vonomics, we first got it. I was a little bit. I have always heard that the trucks are more fuel, are getting more fuel economy. But when we were on the radio, when you were on the radio show, and you had Todd Amon from ATBS, he had talked about this past year that fuel economy has gone down. And he related it directly to the ELD mandate.
Right. So they make the balance of the fuel costs, which were not out of control, versus the hours, which are very important.
Well, it's money, right?
Yeah,
They're
it's all money.
But they get stuck at the shipper, and they want to run harder, and so.
Yes, I mean this is the thing. I guess a big fleet will have all sorts of software that will tell you, if the price of diesel is X, given the ELD mandate, what is the best balance for speed? It's very complex.
Yeah, I don't think it's so much that. I think it's more that the big fleets are able to. They have fuel optimizers, and they are able to pass on those costs to shippers, and the small guys aren't.
I guess my big question is IMO 2020, you're talking about January 1st. It's not like the regulation, everything's going to go into effect, but January 1st is the date they set. Our refineries, our carriers, our shippers, are people moving fast enough? Do they think this date is approaching?
Oh yeah, it's interesting. I mean, some refiners have put in equipment over the last several years, but what's interesting is that the one part of the market that has shown a lot of reaction to it is in the crude market for crudes that are low sulfur heavies, which is a fairly unique type of crude. There's not a lot of them. In fact, I've been reading some stories about the names of the crudes that they go by, and I'm like, I've never heard of this crude before, because they're really, really good at making a low sulfur fuel oil that's easier to blend into a compliant VLSFO for IMO 2020. So the point being, the refiners are already starting to buy the crudes that will help them make the fuels. That's not the only thing you can do here, because there's a limited amount of those types of crudes. If you're going to do the crude market on a Briggs-Myers test, whatever the rarest one now is, low sulfur heavies, or they're the Briggs-Myers test of that. So, but anyway, the market is starting to react in some ways, small ways.
It's definitely something from a carrier standpoint, though, we'll continue to follow. Trucking. I
mean, what you're talking about is an international. I think the reason there's very little discussion in the trucking market is everybody looks at it. I mean, it's the International Maritime Organization thinking about what happens on the oceans and not thinking about how it impacts the domestic trucking market. When we say carrier, I think what you're referring to is trucking carrier.
Yeah.
And again, I think the larger guys are very insulated from this impact. It's the small guys, which are not on fuel surcharges, which are buying diesel at retail, that are the ones that are most impacted, or could potentially be the most impacted by this.
Yeah, of course, very insightful from both Craig Fuller and John Kingston. This was a special edition of FreightWaves Now. We see you every day, Monday through Friday, 4 p.m. Eastern Standard Time.